I'm going to speak about the opportunity of India. We've been investing in India. I've been investing in India for over 20 years as a VC and seen a number of changes. But I think what we see today is not about to happen. It's happened already. And that's Digital India as an investment opportunity, which is the backbone of which is startups in the country today. I'm going to say a few lines. Somebody spoke. There are decades when nothing happens, and there are weeks when decades happen. I don't know who knows who spoke this, but this was said by Lenin. Perhaps nowadays the wrong person to quote. However, today we believe the pace, the agility, the scale, and the predictability of growing startup companies in the country is personified by this statement, and I will prove that in the following slides. I think all of you know the macroeconomic drivers, but fundamentally, many reports, is the GDP growing? Yes. Is the per capita growing? Yes. Are exports growing? Yes. Equity market caps. The first time, and I think these are turning points in the history of a nation, the first time where market cap has grown above the GDP. And that's a turning point which in every nation, which at least is both public and private markets, has been very good for the markets as far as alternative investments are concerned. Exports, renewable energy is 22% of India's consumption, doubling in the next 7 to 8 years. Very important is the digital public infrastructure. Now, I want to take a minute on that and say what it is. A few components have changed the landscape. I think Asha spoke about the fact that there are over 1 billion people who are on Aadhaar, which is the equivalent of Social Security here. If you look at the next layer, the number of credit cards in the country is less than 50 million. Now, how can a country grow digital products and services and give it to the masses when there are only 50 million credit cards? What India has done is built a public infrastructure for payment called UPI, which is used by 300 million Indians today. It is expected that this will grow to the next 5 years into about 700 to 750 million people. From the current $2 trillion worth of transactions annually, the number is expected to significantly shoot up, which basically means that the TAM for any startup, the targeted addressable market, which was determined by credit cards, is now determined by UPI. And that is a game changer for the country, and I'll give you some examples of that. Now, you've heard this before, but at the cost of repetition, the number of consumers who have access to internet is over 800 million. The number of content consumers, over 400 to 500 million. And digital payment users, 300 plus million through UPI. If you look at the data consumption, 16 GB per month, and the cost is so low, it is unbelievable as such. So, effectively, there is a public infrastructure and a private infrastructure. On the basis, on the top of this, companies are being built today. And many have achieved a scale which is unparalleled even in the old economy. So what's the opportunity? I say the opportunity is four-pronged. First, there is a population scale which is possible in startups. And I'm using Nandan's word, population scale, where powered by UPI, we can build enormous companies in a short period of time. What is the meaning of population scale? And I mentioned TAM. The population scale is defined today by 1 billion plus Indians who need very efficient healthcare. It's defined by 1 billion Indians who need lending. It's defined by 1 billion Indians who need insurance. It's defined by 150 million farmers who need efficient agri-tech solutions to improve productivity, soil management, water management, and a whole list of other things. It's defined by over 70 million SMEs who need trade lending, and the list goes on. So, how does technology in the startup world enable to reach this level of scale, and how are entrepreneurs reaching that? That's what India is all about today. And this is not something which has happened over the last 10, 15 years. This has happened effectively, I would say. UPI was launched in 2016, and subsequent to that, scale happened. So it's a phenomena which is 5 years old. The second is the burgeoning startup ecosystem, and I'll go details into it. But since 2007, the total number of startups which have been funded by angels, VCs, and private equity is about 14,000 plus companies. The revenue of these companies today is $18 billion. And the compounded growth rate has been 38% in revenue. I speak revenue because that's an indication. Valuation is not an indication of growth. And we expect, based on our modeling, that this will grow to $200 billion in revenue in the next 5 years. What this means is, this is not a fledgling startup ecosystem. We are talking about an industry which will have all the positives of growth and, of course, all the risks of growth, mostly governance in nature. Now, the third element of this, whether in consumer or agri-tech or any other, I call every tech, financial, agri-tech, consumer, SaaS, is the fact that today it's no longer just digital. Digital has to be built on the basis of a physical world. So technology enables a physical world to be more efficient. Today, what we say is that, and this is in our own portfolio, we've seen it, that consumer companies, for instance, who are now growing in the country, they are growing on the basis of not just trading. They're not just getting products from China and then relabeling them and selling them to the Indian consumers. They're growing because they're setting up manufacturing plants. Lenskart has set up the world's largest 2 manufacturing plants in eyewear, First Cry, in diapers. And these are common products, much better, much cheaper in cost, much cheaper in price, very high quality. Today, under our own portfolio, we have 15 manufacturing units. So Digital India is not about building companies on trading, they're building companies on manufacturing, vertical integration, supply chain efficiencies, and warehousing. And most important, if you have a product which is doing well in India, high quality, low cost, I'm not getting into price, once you sell that in the international market, the margins of Indian companies goes high, at least 2 to 3x. So that increases the profitability of Indian startups in the country. And last but not the least is the fourth leg of the startup ecosystem, which is the venture capital and private equity industry. In the last 5 years, 280 billion has been invested in the country. About 140 billion has been divested. We expect this to grow many-fold. So with these four, I'll go into a little bit more detail. I've taken this already, but fundamentally, this is an engine which is growing. And this engine is demonstrated by the growth of revenue, which I mentioned is $18 billion today. However, important to note is that 45% of that comes from Bangalore and surrounding regions, 24% from Delhi NCR, and Mumbai 14%, and Pune is the fourth. These are the 4 large hubs of startup ecosystem in terms of revenue, which are there in the country, which also means, as a corollary, these are the 4 large hubs which are occupying majority of the investments which come into the country from venture capital and private equity. There is no data available right now across the industry on how companies are growing globally from India. We still have to get that. However, I'm giving you our data because that's in some sense anecdotal. 20% of our 3 billion revenue of our portfolio is now international. And where is it going? Southeast Asia, Americas, and Middle East form the bulk. We expect this on a steady state basis to be 1/3, 1/3, 1/3. But we expect the 20% of international revenue of the portfolio to go to 40% to 45% in the next 5 years. So, effectively, products made in India are high quality and low cost. And when they get not exported, when they are sold outside the country under their own brand, the margins of the Indian companies goes higher, which means it's a very profitable cash flow generating company in the technology sector. And some of the names which I mentioned here are relevant. FirstCry is very strong in the Middle East. Lenskart is now selling in 16 countries across the world. They acquired a company in Japan and paid 300 million cash for it, and together they are now going across the world. Global Bees, within India, acquired companies. 28 companies were acquired in a period of 24 months. That's the pace at which entrepreneurs are growing the companies right now. I've taken this already, but it's very important to note that the paradigm shift which will take place now amongst the VCs is not, can I grow this to so-and-so valuation? I think the paradigm shift which Indian VCs have to understand is, can my product in a startup or service reach the TAM of population scale? And that is a gating factor which will emerge massively as far as the country is concerned. As far as venture capital private equity is concerned, we know there is a winter. However, if you look at India, in the last 3 years, for the first time, venture capital and private equity investments in the country were above $60 billion each year. And this is also shown by how the dip took place between 2022 and 2021. In US and India, the dip in capital absorbed was 10%. In China, it was 50%, and in the other markets around 20%, 40 to 20%. Exits, India was not famous for exits. In the last 5 years, Indian venture capital has returned $140 billion. And we believe, excellent, we believe that and invested $280 billion. I think still there's catching up going on. However, now you'll find institutional, local and global investors who have returned capital every year. We've returned capital every year for 12 years right now. It's possible. It is at global performance levels. We believe, based on our modeling, that in the next 5 years, the total absorption of capital in India is likely to cross $450 billion. And that is the opportunity which we are talking about for Digital India. We also believe that based on current norms which we see, current global investors which are coming into the market space, the exits are likely to cross $300 billion. If you look at the whole space of capital coming in from global markets, the bulk of the capital now is coming into late stage. The Indian capital at the early stage is adequate and more than adequate, but more capital is coming in and more secondaries are happening. If you look at the right-hand pie chart, the exits have taken place broadly in 3 areas: IPOs, strategic, and secondaries. It's almost 1/3, 1/3, 1/3. If you look at a venture capital, this is across P and VC. If you look at only VCs, the exits have taken place, bulk of it as secondaries. So you will find more and more, as it is already happening in the last 3 years, big secondaries happening. In my parlance, exits used to be TikToks, and today we find jumbo exits happening. Again, in Lenskart, we just found Ardia coming in with $500 million, and the exit portion for older VCs was $425 million. That scale is repeated in FirstCry. That scale is repeated in many other companies in the country, and you will find more and more happening. So, effectively, all three for Ps and VCs are equal right now, but for venture capital, it is definitely more strategic. As far as IPOs is concerned, there is a list of companies going public, but I think there's also a debate going on, why should we go public? Because the markets are so choppy, and maybe valuations are better when you're private. Maybe it's easier to grow globally through organic or through inorganic as such in terms of growth overall. So, you asked a question about, is it all global capital? Indian capital forms approximately 12% in the past. It's my belief that Indian capital is going to grow to 25 to 30% in the next 5 years. Now, why is this important? It's important because Indians are now taking risk in their own country. And that's a very important factor for global capital to come in. Indian capital looks at governance, which is practiced in process form from global capital. Global capital looks at Indian capital from an operational perspective. And Indian capital is very detailed because most of it comes from family offices. The wealth which is there in India from family offices is over $2 trillion. And a significant part of that, up to 15 to 20%, that's what significant means here, will be in alternative assets in the next 7 to 8 years. And that's a very big game changer. If you look at the public markets investments are almost equal between Indian investors and foreign investors. We expect in the next 10 years, venture investments, the private markets to be significantly higher, 40 to 50% compared to global investors. That's a big market. China, 60% of capital is local investors. In many cases, global investors cannot find a space there. So I think India, you'll find Indian capital growing faster than international capital. In our case, it's 50-50. So, what are the 5 trends in the digital adoption investments? First, emergence of digital public infrastructure. I've spoken about it. Second, rise of the investment boosting the digital economy and the physical economy. The capital investment in the physical economy, whether it's roads, ports, airport, has shot up, and that's very important for the digital economy to grow. Advent of 4G and 5G data speeds, AI, population scale digital market being enabled, and last but not the least is UPI and ONDC enabled GT omnichannel markets. I'll take a minute on this. If you look at how companies are selling products in the country today, online makes it more efficient and reachable. You can buy a product from Amazon or Flipkart anywhere in the country. However, the bulk of the trade takes place through general trade. General trade does not have credit cards. General trade used to operate in cash. General trade today is operating bulk in UPI. A 1 rupee transaction is worth its weight in gold and can be done instantly. I'm approving for payments I have to make on UPI payments in the US on my cell phone. UPI is also going to multiple countries. And that's a very interesting theme for us. It hasn't happened yet, but if UPI is going to go to 10, 12 countries, then there's a possibility of entrepreneurs riding that wave and thinking of selling outside the country based on UPI. ONDC is a very interesting, it's a marketplace for small traders, which perhaps don't find place on Amazon or Flipkart. And that, I think, is a very good public infrastructure which will enable the ecosystem to grow. I also believe that large consumer companies, marketplaces, will have to plug in to ONDC for their survival. So these are the trends as far as digital innovation and adoption is concerned. And what's the key trends in VCP? Some repetition, but population scale is a very, very important thing. Think massive scale. New pools of capital are predominantly coming in India right now in the VCP market from Middle East and from Asia. A little bit from India right now. However, not much from US and not much from Europe. And the reason is that knowledge about the opportunity is perhaps not as common in these countries like in the Middle East and like in Asia. International operations, most of these companies will start and form 20 to 50% of their global revenues. Exits, the holy grail. Scaled startups are absorbing capital. There are 2 lines of capital they absorb in debt: business credit and their own balance sheet credit. In our own portfolio, business credit is what I'm a lending company, so I take third-party off-balance sheet capital and give it to, let's say, on a technology platform to borrowers. In our own case, just to give you an example of a scale, business capital, which is being consumed over the next 5 years at current run rates by a few of our fintech companies, is to the tune of $65 billion. Just one VC. This is the tune of $65 billion. And all that comes from India. It doesn't come from outside. So the opportunity is for global capital to come in here, overall. Supply chain innovation, vertical integration, manufacturing, and emergence of Indian VCs, very important. Because Indian VCs, and by the way, 60% of China is local VCs. I believe in the next 10 years, this is going to be a very important criteria because decisions are fundamentally taken locally. So, is Digital India delivering at scale? The answer is yes. These are some of the brands which have already delivered. And these brands at the top level are all institutional corporate brands. The Tata Geo platform, the Tata Digital platform, the Geo platform, Flipkart and Amazon. But below that is all startups. Many of these, when we invested 12 to 13 years back, were doing revenues of something like a few $1,000s every month. Today, Lenskart is close to $1 billion. FirstCry is close to $1 billion. Bizongo is close to $1 billion. The emergence of 1 billion revenue companies. Today, out of the 18 billion revenue, 7 are 1 billion companies. In the next 5 years, we expect another 30 to emerge with 1 billion revenue each. These are cash flow generation companies, profitable companies, some of them private, some of them public. And all technology enabled. Thank you very much.